Hi, this is Yehong. I'm a macro option trader. Today is April 25, 2026, around 3 p.m. Japan time. Let's quick go through the market from yesterday. The Nikkei closed at 59716 yen, getting very close to 60000. And the night session futures are already above 60000, around 60070. So honestly, the market looks very strong right now. Even with all the uncertainty, Japan equities are holding up real well. I'm come back to that later. Volatility is at 29.59 and the Nikkei PL is around 20.5. EPS is about 2912 yen, so we are getting close to 3000 yen. So overall, earnings looks strong and the market is pricing that in. At the same time, Japan's 30-year bond yield is at 3.61%, which is quite high. So we're in a situation where both stocks and the interest rate are high. USD JPY is around 159, and so the weak yen is clearly supporting equities. Looking at the US, the S&P is at 7165 point and still near all-time high. The VIX is around 18.7, and so no real stress in the market. The bond market is also stable, and gold is at $4710, not that strong right now. ZVZ is around 25.9, so it looks like gold is just taking a break after a strong rally. Bitcoin is around $77,000. If you look at the flow since late in 2024, when Trump come back, many moves like this: first Bitcoin, then gold, and now equities. So it's like a rotation across assets. And now let's talk about the home trade situation. There have been repeated headlines and share finance breakdowns in negotiations, but the market is getting used to it. There are still reserves device and we see energy shock before, so the system is more prepared. Oil prices are high, but not high enough yet to really damage corporate earnings. Probably we need to see something like 100 to $120 per barrel to get a real reaction from the market. Here's another angle. We are in the AI era. If energy is cheap and stable, AI boosts productivity, which creates a deflation pressure. But now, with geopolitical risk, oil price stay high, creating inflation pressure. So what's happening is oil is acting like a buffer against the AI-driven deflation. That balance might actually be supporting the market. From a bigger perspective, this situation could also be convenient for the US. And they want the AI dominance, a growth in the space industry, and to manage their massive debt. By keeping the home situation unstable, they can keep oil price elevated, slow down or control air-driven deflation, pressure China, and push capital into space industries. And with things like a potential SpaceX IPO, this environment actually makes sense. So some of these geopolitical moves might even be partial managed or staged. Uh, but here's a risk. The market is getting used to this, and when that happens, sometimes the next move is the opposite. Now, looking ahead to next week, we are entering a golden week in Japan. There are very few trading days, and the cash market will be mostly closed, while the futures stay open. That creates a strong, strange environment. Usually, Golden Week is quiet, but this time we have a job risk in the background, so we should stay cautious. Last year, the market went up about 40% in the May, so upside is still possible. To be honest, this is a very hard market to read. it can go both ways. One key thing to watch is the Bank of Japan. With stocks to this high, a late hike is definitely possible, especially with a higher oil price, which add inflation pressure. But at the same time, if you look at everyday goods like vegetable price are actually falling, consumers are becoming more price sensitive, and the companies need to careful with pricing. So we have this mismatch. Inflation expectations versus real consumer behavior. That's something we really need to watch closely. That's it all for today. Thank you for listening and see you next time.